Welcome to Yahoo Finance Live. I'm Shauna Smith along with Dave Briggs, and let's get you up to speed with everything you need to know. Starting with today's market action, stocks are trading to the downside. You're looking at the Dow off 259 points, S&P off just about 0.8%, as well as the Nasdaq. One of the movers of the day is GM. General Motors trading slightly lower after the automaker revealed around 5,000 white-collar workers took buyout offers as part of the company's cost reduction plan. We will get an analyst take coming up.
Then Piper Sandler is out with its survey of the brands and trends teens are most into at the moment. We'll bring you some of the stocks moving off of that report ahead. But first, let's get you updated on the biggest story of the day, if not year. Former President Donald Trump pleading not guilty to 34 felony counts of business fraud. The former president is still in a New York City courtroom where he's being arraigned. Yahoo Finance senior columnist Rick Newman is here. And Rick, we are watching history unfold. This has never before happened. Just your impressions watching this day unfold in a New York courtroom.
Well, it's surreal, that's for sure. Now, there's no live video from inside the courtroom where Trump is being arraigned. There are some photographs that have come out. News analysts have been trying to understand every detail of the president's expression in those photographs. He does look chastened. It's worth noting, I suppose, that he is sitting at a defendant's table rather than standing at a podium towering over everybody else, which is the way we're used to seeing him at campaign rallies in the Oval Office briefing room when he was president. However, I think Trump will return to form before long. He's going to make an address tonight, and we'll see what he has to say about it. He has pleaded not guilty to all of these charges. He will for sure say he's not guilty. I think a really interesting thing to look for is how rabid, if you pardon the use of the word, is Trump about these charges. Is he going to be in attack mode, going after the judge, going after the prosecutor, or is he going to be more chastened than we might be accustomed to, given that he is now a criminal defendant? It's a huge deal.
Yeah, Rick, I guess, what do you expect that tone to be, given the fact that it could be either or? And also, what do you think this means just for Trump going forward and looking ahead to 2024?
If you go back to some of the lawsuits Trump has been involved in, and there have been hundreds, it might even be thousands. If you ever read depositions he gives when he is under oath, he is much more measured and guarded when he knows there's a penalty for lying if he perjures himself. Completely different from the bombast we hear when he's campaigning, or most of the time when he's just talking publicly in any way. So it'll be just very interesting to note the contrasts moving forward between the type of bombast we're used to Trump, name calling, attacking everybody, never go on defense, always play offense, and what he might say with regard to the judge in this case, the prosecutor, and other people involved in the case, as well as the charges themselves. Because if he says something publicly that he ends up contradicting, and if he's under oath at some point, that could become a legal problem for him. So watch for that. And of course, he is going to be trying to take advantage of this for electoral purposes. I don't necessarily believe, as others do, that this is a big boost for Trump and his electoral hopes for 2024. It's definitely been a fundraising boom for him. I mean, he has been fundraising off of it since the moment he himself mistakenly said he was going to get arrested that Tuesday, and it turned out to be premature, but he was right about getting arrested. I mean, he's been raking in the money. So people do want to give him money when they think he's a victim, but I think Trump has just hit a ceiling in terms of his political support. I think one thing going forward is this is just a disaster for the Republican Party because the lead candidate is now, for the presidential race 24, is now a criminal defendant, and it's probably going to get a lot worse for Trump before the election actually comes.
And the other candidates are folding around him, are defending him. Do you expect that to break at some point? If they're going to take him on, someone has to do that.
We're seeing some Republicans are taking him on. You've got Sununu in New Hampshire as an example. You just had Asa Hutchinson. He's the governor of Arkansas. He has now declared for presidency. I mean, fair to call him a sleeper candidate, but I think we did once have another governor of Arkansas who did get elected president. So it's possible.
Sounds right.
I think that the fact that Trump is now formally charged with crimes makes it more plausible that Republicans will oppose him, because at least now there are actual charges and in a way they are siding with law enforcement. So if there are any law and order Republicans left, I mean, at least they can say, well, this is the law. I mean, this is a criminal indictment. It's not a civil lawsuit. And we're probably going to see more cases going after Trump in Georgia with election fraud and possibly at the federal level. So this is just a start.
And one might argue far more consequential cases, at least as far as Georgia goes, perhaps January 6th. Rick, good to see you, sir. Thanks so much for that perspective. All right, former President Donald Trump pleading not guilty to 34 felony counts. Here to help us break down what's next is John Flannery, a former assistant U.S. attorney in the Southern District of New York. It's great to see you, sir. As you watch these historic moments unfold, just first, before we get into the legal aspects, your reaction.
Oh, my reaction is we finally pivoted to, reform our republic. The trouble about Trump has been that no one has brought him to account for what he's done. So I think this is a day of celebration in the sense of the law is being respected he so long has disrespected, even by the arrest, even though the presumption of innocence runs at this point. Someone has finally, a good old boy from the Bronx, I'm originally from the Bronx, has brought a case against him, and I think it's a strong case. I hear what some people say, but the statute is pretty straightforward. And I don't know if the picture you had earlier on the screen was today, but he looks pretty downtrodden there. You know, he has two speeds. One is I'm king, get out of my way, and the other is I'm a victim. And I got the feeling that he's going to play the victim until he can get to his people at 8 o'clock tonight, and then maybe say the things that may or may not upset the court, depending on how bombastic and implicitly or expressly threatening he is.
Yeah, John, the pictures that we are showing are from today. You mentioned the fact that you do think they have a strong case. Is it going to be hard at all to prove? What does that roadmap look like?
Well, I don't think so. Let me bear with me as a lawyer for a moment who relies on the language of statutes taught in legal method in first year at Columbia Law, that we always read the statute. And it's very simple. It says a person is guilty of falsifying business records in the second degree when, with intent to defraud, he makes or causes a false entry in the business records of an enterprise. That's the false statements of what the money was for that Trump channeled to Cohen for what money Cohen had advanced in the Stormy Daniels matter. Okay, so that's part one. What makes it a felony? What makes it a felony is if, in addition, his intent to defraud includes an intent to commit another crime or to aid or conceal the commission thereof. So that's pretty straightforward English. Now, when people do bribes, not everybody does what Jefferson did. I don't even remember. I'm talking about Congressman Jefferson from Louisiana. He hid his money, $90,000, in a freezer. So they're talking about cold cash. But he also had people pay him with false names, that he was of counsel. This was for, consulting, things like that. So it goes back to time immemorial that the way people conceal bribes and monies they don't want is they label them as something legitimate, but they have no corresponding reality to what they're labeled for. And in this case, the sequence, the timeline of Cohen doing what he did and finally getting, when Trump was president, those payments in that large handwriting that, that Trump prefers. So that's the case. Now, I've said it in a pretty short period of time, and they're going to prove it in several ways. And it helps that they have Cohen. But I've heard now reported that there's also a conspiracy charge. There's a conspiracy charge so they can take the statements of Cohen, say it's not hearsay because it's in pursuit of a conspiracy, this effort to defraud. And then what Cohen says, even when Trump is not president, is ascribed to him. Yeah. The same is true of Pecker, what he says, and other people, I'm sure. So the combination of the conspiracy, the scheme to defraud, and this structure that I've just described in the statutes, I think that's how you do this case. And,
John, the American public is going to have, it's a tall burden for Alvin Bragg, because the American public is going to say, what is possibly new here? You've had this case for years now. Why now?
I think that's a good question, Dave, and I hear it. And I think there's been a lot of misrepresentations to the people about how we got to here. That is how Bragg is doing this. And the answer to that is when the the Manhattan DA was thinking of going forward with the case of Cohen, no less than the Justice Department in the Southern District said, no, don't do that. We don't want you to do that. But there's another factor. Barr, when Attorney General, sat on the head of the U.S. Attorney Berman and didn't want him to mention Trump at all, including in the Cohen indictment that did mention a person who was involved in it. And when Berman appeared to be prepared to push forward, he was thrown out the door and fired. And Berman has written about it in his book. So this was the charge that was not permitted by the Trump Barr Justice, so-called Justice Department. Yeah. And now we have Bragg taking a legitimate case and saying, okay, now let's see what happened. And there are three parts to this case. One is the sex problem. Two is the kind of fraud that Trump is familiar with. And the third is to mess up an election, to conceal the fact that when he had that gotcha scene, well, that this is part of that puzzle. So it makes sense.
But on that, as per the election, John, in terms of its importance, this against what potentially may have happened in Georgia, what may have happened in inciting an insurrection on January 6th on our nation's capital, their level of importance to you in comparison. And again, this might play out a year from now at a trial against the backdrop of GOP primaries.
I hear you, and it's a fair public policy question. But consider the fact, how long do we wait for these other people to wake up and prosecute? Garland is, he just sits up there inert. And I'm hoping that, Jack Smith changes that. But Garland still has the last word on what he does. We had the prosecutor down in Georgia. She sent it to a grand jury that couldn't indict. A whole year passed. She said the prosecution was imminent, and there's still not a prosecution. So this is the problem that we have. Yeah. We have to take the cases as we find them. And I pictured in criticism those members of the prosecution team up and down the East Coast in this way. I say that it's sort of like a whole bunch of us youngsters standing by the side of a pool and no one jumps in. Well, Bragg has jumped in, and I think that's important because I think that can make a difference for the others to find the courage to do what they should have done months and years ago.
John Flannery, great to get your perspective. And we, of course, will continue covering this story over the next couple of hours and days and months to come. Great to hear from you. Thanks so much. Well, before we head to break, let's do a quick check of the markets. Is sponsored by Tasty Trade. Again, you're looking at losses across the board. The Dow off just over 240 points. NASDAQ off about 0.8%. Movement here to the downside, but we are just getting started on Yahoo Finance Live. Coming up, JP Morgan CEO Jamie Dimon warning that the banking crisis is, quote, not over yet, and all that the U.S. will feel the effects for years to come. So what are the risks that lie ahead? Threadneedles and Barry breaks it all down for us next. And a new magic word in tech is taking over, the metaverse. We're asking us experts whether or not this is just a trend, if it's the future, or if it's a fad. They will weigh in later on in the program. You won't want to miss that. JP Morgan CEO Jamie Dimon releasing his annual letter to shareholders today, saying about the Silicon Valley bank collapse, quote, "The current crisis is not yet over, and even when it is behind us, there will be repercussions from it for years to come." Here to discuss what that means for the markets going forward, we want to bring in Ann Berry, Threadneedle Strategies founder. Ann, it's great to have you back on set. So let's start with that first statement there from Jamie Dimon. Lots of concern about what maybe that could mean for the markets. Is more turmoil maybe ahead?
Certainly, he's softened what he'd said before about a recession coming, but there are a couple of really interesting things that he said here. So number one is from the banking crisis, sees credit conditions tightening, bad for consumers. Secondly, he really spends a lot of time talking about how he thinks mortgages are going to become harder to come by in general from banks and how that's bad for Americans. So that was a really big focus of this letter.
What will be the impact if that in fact plays out?
Well, it's interesting. So we saw in the February data, and I think we talked about it together, we saw a bit of a bounce back in terms of housing sales, maybe housing's becoming more affordable. But if mortgages just aren't available because it's too expensive for banks to issue them, underwrite them, and service them, that's very bad news for the cost of living.
Is that something the Fed wants to see? Dare I say that? He needs to see some damage in the housing sector. Is that good news for Jerome Powell?
I don't think it's good news in the aggregate, because one of the big issues, right, there's a sort of immediate term, what are we going to do with demand? Is it too strong? But there's another issue, which is in terms of social mobility, in terms of whether it's possible for different demographics to get on the housing ladder. That's been a core part of the American dream since the dawn of the country, right? And if it's no longer available, there are bigger issues.
And when we talk about the state of so many consumers right now, the consumer has really been resilient up until we started seeing some cracks in this latest round of earnings reports. But Jamie also talked about what is being spent right now, and he expects to see expects consumers to spend the bulk of the remaining excess savings. When we talk about the economic impact of that going forward, is that something that we should be concerned about?
Absolutely something that we should worry about. The consumer has been buoying up the last 2 years of resilience. I wouldn't even call it growth, resilience here in the US. The fact that it's going to be drawn down, those savings going away, right as we saw data today coming out saying that the number of job openings is the lowest it has been since February prior to the pandemic. So it's, the labor market starting to get a little bit softer while those savings going away is not a great combination.
You talked about credit conditions tightening. What about the impact on bank earnings for this quarter?
Yeah, I'm actually very concerned about bank earnings for some banks for this quarter. I think we're going to see and hear in stereo the regional banks getting pressure. At the same time, we see the big banks actually continuing to do quite well. And if you read Jamie Dimon's letter, he says, I'm almost surprised at how well we did in 2022, right, at JP Morgan. I think we're going to see those winners and losers emerge again.
But he said it's absurd, the notion that this meltdown was good for big banks. Is that right?
Absolutely right. Confidence weakening in the US banking system, period, helps absolutely nobody. And I would just say this sort of off the record, but I was at dinner at JP Morgan last week, and the teams at JP Morgan were very clearly told, do not go out there crowing about the fact that we are probably going to gain market share. Do not aggressively go after other banks' customers. Take the inbound calls, but they were prohibited from being aggressive.
And clearly that was why so many of the larger banks acted so quickly in trying to stabilize some of the volatility that we were seeing within the regional banks. What about the leadership that we've seen since the start of the year? Certainly has been all about the outperformance of tech, all about the outperformance of communication services. Is that a shift in investor sentiment, or is that something that you see fading here during this current quarter?
Yeah, I'm completely at a loss to to understand why we've seen tech bounce back in the way that it has. It's a complete mystery to me. It's also a mystery why the S&P is still above 4,000 in the environment that we're in. I do think we're seeing a flight back to quality. So almost irrespective of which sector it is, whether it's big tech, whether it's industrial, strong balance sheets, good free cash flow, we're seeing a lot of movement there. But I think some of the broader rebound, particularly some of these NASDAQ names, remains, frankly, I don't understand why some of the growth names are bouncing back.
Is too much made of it? Because Apple, Nvidia, and Microsoft
Yeah.
is essentially 90%
Yep.
of the gains. Are we making too much of essentially three companies leading the entire sector?
I think in terms of this mindset, look, Apple, if we want to talk about the bellwether stock for consumer sentiment, right, if consumers are going to not have as much savings and employment's not going to be as robust as it was, Apple's going to be feeling that at some point, right? Nvidia's a slightly different play, but I do worry about the Nvidia story. Right now, it's all AI all the time, and the fact that that story is hanging on that one piece is just very, very concerning.
What do you make about all this hype surrounding AI? Because it
love the
almost seemed
hype.
like every single
Yeah.
technology company
Yeah.
who even mentioned
Yeah.
who have even mentioned AI, we saw their stock take off. Is that something that's going to stick here, or is that just a trend?
Do you know what's really fascinating? It was actually, I was working this weekend and I was meeting with a founder who's out raising money right now, not a public company, but a very experienced CEO. And his board had said to him, can you put AI into the pitch deck? And he turned around and said, if I do that, I lose credibility. Right, we've gone so far the other way now on the pendulum of AI being everywhere. It's sort of everything, everywhere, all at once, right? To misquote the movie title. We've got to pare it back because I just do think we saw this with the metaverse, right? We saw this when it came to blockchain. Those two buzzwords went everywhere, and the wheat and the chaff needs to be sorted out.
This is a counter take than I expected. Even the president weighing in on AI just moments ago. It can help disease and climate change. He does say there are potential risks.
Yeah.
But Bill Gates himself said this will impact essentially every single industry on the planet. Goldman Sachs impact 300 million workers around the world. Why do you think we need to pump the brakes? And I know you mentioned the metaverse. Don't you think this is in every quantifiable way different?
I don't think we should pump the brakes in terms of anticipating the impact that AI is going to have. I think we should be very clear about defining what it is. So if I think about companies out there talking about artificial intelligence broadly, some of them simply mean they've got quite smart algorithms that are taking data inputs and they're not actually generating anything. They're just using a lot of computational power to do lots of calculations quickly. That's different from the kind of AI like ChatGPT that everyone's been excited about, which is generative. So I think elements of AI in its different levels of sophistication will touch everything. But in terms of rallies and stock prices, where the companies and the management teams are not defining what exactly they mean by it, that's where I get nervous and think you can start seeing bubble territory.
So, and we've talked about the leadership there in AI, at least up till now, some questions about that going forward. What do you like, though, in terms of positioning right now? If it's not tech, if it's not communication services, and outside of the banks?
So I'm incredibly boring. I think cash is queen. I keep saying cash is queen. Right now it's queen. But I do think it'll change at some point. So I'm looking out for Q2 earnings. I think they're going to be weaker than expected. And if it is weaker than expected, I'm going to start legging back into consumer staples, where there's really strong cash flow. Start legging back in, perhaps to financials, where I do think there could be, some rebound post-recession.
It's the time of year some look out for an April surprise. Could have in some ways been the OPEC production cuts.
Yeah.
Doesn't look to be as massive an earth-changing shift. What could that be for you?
In terms of the big surprise
yes.
the one that I'm still looking at is what happens geopolitically, what happens in Ukraine. Does that situation look like it's nudging towards being resolved? And then a derivative of that is what continues to happen with US-China relations. That headline comes in and out depending on what's going on like a day like today, but it's so fundamental. And Jamie Dimon talks about this, by the way. He's pretty clear that Ukraine and the implications for geopolitical stability is his number one concern.
And what could impact, real quick, the US-China relations? Could TikTok have any implication on that? Are we talking something major geopolitically like Taiwan?
I think it's both, but I think TikTok is sort of a lead indicator of that, right? This whole idea that the US wants to continue to lean in to protect its intellectual property and to continue to protect consumer data, that's a theme that has been spanning several administrations now. And it's just getting louder and louder. And I think an outright TikTok ban, if it gets to that point, is a real shot across the bows of a different level.
It certainly would be.
And Barry, nice to see you, my friend.
Thanks,
Thank
guys.
you. Appreciate it as always. Coming up, Piper Sandler released its 2023 Gen Z survey highlighting the biggest spending trends and brand preferences for American teenagers. We'll give our takeaways from the annual report on the other side of the break.
Piper Sandler out with its Taking Stock with Teens, a semi-annual survey going through the top brands, spending trends of teens nationwide, what they're spending their money on and what they are not. There was a number of good headlines in this report. It's the theme of today's triple play. So let's get to that first finding, and that is Ulta. It's a top performer as teens just keep buying makeup. They're spending more on it right now. Cosmetics accounted for the majority of money spent on beauty, ranking number one for the first time in about 3 years. Now, Ulta is the preferred beauty destination among these teams. 41% share. We've covered the success of Ulta's loyalty program in the past. Remember, it has more than 40 million members worldwide. To no surprise, this survey found that Ulta also held the strongest beauty loyalty membership among teens at 63% of those who are members here at Ulta. And Allie, Ulta has certainly been an outperformer as of late, up almost 20% since the start of the year. And it's certainly one of those names that you would think maybe will be in for a little bit of a rough ride when we talk about the slowing economy, but that certainly does not seem to be taking place.
Yeah, outperformer on the stock market. Also an outperformer in this survey, just consistently the highest rated among teens. I thought it was interesting to see cosmetics overtake skincare in terms of that priority spend for teens, the first time since spring of 2020. And I think you can credit the TikTok boom, the Get Ready With Me videos, a lot of those videos tagging different brands, different makeup products. The survey also indicated that there are more everyday makeup wearers, and of those everyday makeup wearers, they spend around $185 annually on makeup. I wish I spent that little. I think I probably spend $1,000 a year, and that's being very conservative.
And I also wish I was spending more on makeup rather than skincare
and skincare too can get very, very, very pricey, but it's a very competitive industry. It is very expensive, so it's interesting to see Ulta take the top point there, because for me, I go to Sephora a lot of the time. Maybe that's just more accessible to where I am in New York City.
Which wasn't far behind in second place.
Right.
But 41% overwhelmingly the top, and then you could add in their Target, which is third in this, to give them about 48, almost 50% of the market share. It's just another beneficiary of that spending shift from goods to experiences and services. People are going out, they're doing things, they want to look good, and they just continue to crush it, up 17% year to date, 37% over the last 12 months, and it appears completely recession-proof no matter what lies around the next corner.
Ulta doing well in this teen survey. Beyond Meat, though, doing not so well. That is my play today. Despite environmental issues being the #1 issue for teens in this survey, plant-based meat does not seem like the solution. Just 14% of teens say they consume plant-based meat, and of that 14%, 25% say they actually plan to consume less over the next 12 months. That's an increase compared to the previous survey. Now, on top of that, Impossible is the preferred brand among those respondents, with a 39% preference over Beyond Meat's 34%. Now, shares of Beyond, they're trading relatively flat today, but far below their 52-week high of $51.98 a share. Still, the stock seems to have climbed somewhat over this past year, with shares up more than 30% year to date. But guys, it seems like this fad, this desire to eat more plant-based meat, that was a trend that many said before was here to stay. It seems like it's fizzling out, though.
I think it's really surprising to see how it's died out. It appeared to be one of those things that was only here to stay and continue to grow. Now, I've never had one, so I have to ask, like, is there a difference among them, though? Are they all pretty much the same?
I was going to say, I actually agree with the teens on this one. I prefer Impossible over Beyond, but I think both are very, very good.
Yeah, I enjoy it, but to me, I would rather go organic, grass-fed, because there were recent reports and headlines that you have a lot of sodium, there's a lot of soy in some of these products. So I think that was something that sort of, prevented people from really going all in on these plant-based alternatives.
Reading a note this morning, Beyond Meat is beyond help for two key reasons. The demand is #1, but #2, and this is not insignificant, negative gross margins, 3 straight quarters. It's costing more to produce it than they are selling it for. Needless to say, that is not a sustainable business model.
Yeah, it's clearly not. And if you take a look at the stock price over the last year, it's off just about 70%. And this was one of the high flyers, one of Wall Street's darlings here, going back a couple of years ago when the company first went public. One silver lining, though, in this report, of the 86% who don't consume plant-based meat, about a third said that they are willing to try it. So maybe they'll get some more believers, some more fans in the future. But again, when you take a look at how few of teens are eating plant-based foods. Definitely an alarming statistic here for a number of these types of companies.
No doubt. Staying with the Piper Sandler teen survey, my play is on holdings. The European performance running shoe brand continues to gain ground on the legacy brands. On coming in at number 12 for teens' favorite footwear brand, but that's up from 19 in the spring of last year. On what was number 5 when it comes to upper income teens' favorite athletic footwear brand. And the Piper Sandler survey suggests On is taking share away from Adidas, Brooks, and ASICS, those legacy companies. Shares of On, you can see, up more than 4.5%. Recently popped 20% on that Q4 earnings report when they told us sales were up 92%. Also in this report, Crocs, a very strong brand among teens, ranked 6th. And Crocs owned Hey Dude is at number 8. So they check in with 2 of the top 8, and both are up 25 basis points in the Piper survey. Of course, the king remains Nike. They dominate apparel and footwear, and increasing their market share after all these years. Nike shares continue to climb up almost 2%. And it's just hard for that not to be my takeaway, that it doesn't matter how much time has passed. Nike owns teens, and they show no sign of stopping. On is really a gainer, never a competitor for Nike, but certainly a gainer.
Yeah, certainly. I think the tremendous growth that we have seen in On is remarkable, especially in this economic environment right now. When we heard from the CEO after that last earnings call, he was saying they mostly did not have to discount their products. Compare that even to Nike, which did offer some promotions in its most recent quarter. The brand strength of On is certainly something incredible, and I think something that many of these players within the space need to take notice of. I'm sure they have taken notice of the success right there, because what they're doing with Roger Federer, with the name, they're doing everything. It's almost like a similar playbook to Nike several years ago.
But Allie, with Federer, retired athlete, and the price point, I was surprised to see teens are on board with On. Were you not?
Bougie teens. Yeah, and Crocs stood out to me too, because what a turnaround plan that company has undergone. Remember when people were just making fun of this company? They signed all those celebrities, they got on Post Malone. I own 2 pairs of Hey Dudes. I didn't realize they were owned by Crocs at first. They're very comfortable, they're very cool, modern. You can toss them in the washing machine, which I think is a really big attractive element for teens.
And they're a good price point too.
And they're a great price point. So
I've got some coming, I'm excited.
you got Hey Dudes? And they're very comfy.
And you know, Crocs was a brand that everyone thought was just a COVID shift, that once COVID passed, people would go back to wearing fancy shoes. It did not. It was not like Peloton. It was not like Zoom. It was not like every other pandemic stock. It continued to grow out of COVID, which is a surprise.
Yeah, and their sandals for the women have certainly been a hit recently. But actually, in this survey, among the teens at least, the males made up most of the gain in market share, which took me a little bit by surprise. You got to try a pair of Crocs.
Crocs?
No, you're not in yet?
Not
All right,
a
well,
Crocs
here
Hey
too.
Dudes, but Crocs
You gotta do what the kids are doing. That's what's
46
cool.
years, never been on my feet, and that is not going to
They're
change.
comfy. I'm with Allie.
Yeah,
They're
they
very comfy. All right, well, coming up next, GM saying 5,000 salaried workers are taking buyouts as part of the automaker's plans to trim costs. We will get an analyst take next. Let's do a quick check of the market sponsored by Tasty Trade. Again, you're looking at all three of the major averages in the red. It looks like that 4 days of gains, 4-day rally that we had seen playing out in the market is about to come to an end. In terms of the worst performers in today's action, energy giving back some of the gains that we saw yesterday with the XLE off just about 2%. Industrials also among the biggest decliners today. Financials is also off just about 1%.
All right, let's talk some autos now. GM shares down more than 2%. About 30 minutes before the close, the company announcing today that 5,000 white-collar workers participated in GM's voluntary buyout program. GM now in position to avoid layoffs, a spokesperson saying in an official statement, quote, given the results of the program, company-wide and voluntary separations are not a consideration at this point. Joining us now to weigh in on this is David Wiston, Morningstar equity strategist for U.S. Autos. David, good to see you. So are further cuts coming to GM, or is that it?
Well, in autos, I guess you never know, but I think as long as the economy doesn't completely fall off a cliff, and that's probably a whole nother segment to discuss with an economist, but I think most of the cost cuts going forward, remember they did talk about at their last earnings call $2 billion in cost reductions by the end of 2024, so over the next 2 years, and they're getting $1 billion of it from headcount, with the numbers confirmed today. So the rest of it's probably coming from other places of overhead, and in particular reducing vehicle complexity, reducing materials build as much as you can, anything to make the company more efficient, because they've got to compete against not only Tesla, but they've also probably got some cost increases coming with the UAW contract negotiations this summer.
Well, David, let's talk a little bit more about Tesla and how GM stacks up, because with its most recent sales numbers, it now has overtaken Ford as the number 2 seller of EVs behind Tesla. How much progress has GM made, and how much more ground do you expect them to cover, narrowing that margin here with Tesla?
Yeah, I think people, the general public, when they think of GM EVs, they probably just think of the Bolt. And for a long time that was true, but they weren't really paying attention to all the other product announcements that have been coming out. And we're just about finally at the point where these are going from announcements to actual vehicles you can buy. The Cadillac Lyriq crossover, for example, is already out, but this fall, first of the spring, you've got the Silverado BEV going to commercial customers this year, and then that expands across to the retail channel over the next 12 months. And then in the fall, you've got the Blazer, and then the Equinox BEV, I think, is a really interesting test, because that's going to be priced starting at around $30,000. And that's really the first attempt at a true mass market EV that has good range and actually has features you'd want to buy. Previously, for more, quote, affordable BEVs were these Econo boxes that got you 80 to 100 miles on a charge, and that just wasn't good enough. And that opened the door really nicely for Tesla. But Tesla now has much more competition, not only from GM with the truck and the crossovers and the Sierra BEV 2 coming. You've got the Cadillac Celestiq at the very high end, a $300,000 Cadillac. It's a really interesting experiment they're doing there. But also across, look at what the Germans are doing, and Ford with the Mustang Mach-E and their F-150 Lightning. There's a lot of choices now in the EV space.
Yeah, let's dial in a little bit more on Ford. I'd say majority of the press in that space has gone to Ford because of the success of the Ford F-150 Lightning, but them slipping below GM in terms of U.S. EV sales. What's your reaction? How surprised were you by that development?
Well, to be fair, the Mach-E's been out over a year, and then with Lightning, they did have a battery issue. I read in the papers that there was a fire that it didn't lead to a mass recall, but there was a fire from what I read in some media reports. So they had to stop production in Dearborn on the Lightning for at least 5 weeks, and that just got resumed very late in the quarter to full production. So that between that and the Bolt coming back from the recalls on that old generation battery technology, and that's not the Ultium technology that's in all the other GM EVs. It opened the door a bit for GM to get some volume, but ultimately it's going to be about profitability. And when you compare GM and Ford right now, GM's comfortably ahead of Ford in the profitability department.
David, when we talk about widespread EV adoption, obviously there's certainly a number of hurdles. You mentioned the fact that we need a lower priced EV, and we need many of those models in order to increase that widespread adoption. What do you think a realistic time frame looks like for this? 2030, is that realistic?
Yeah, it's going to be interesting because the state of California and the 17, 18 other states that are following California have decided that you will only be able to buy a zero emission vehicle in 2035. And I think the ratio is 68% by 2030. The Equinox I mentioned earlier is the first, to your question, that's really the first test of, can EVs have major mass market appeal at that price point and not be branded a Tesla? Tesla really, they had an opportunity here, I think, to really put a stranglehold on the market, and it looks like they're going to miss that window, although there's plenty of time to go. But you need a lot more product out, and we need to get EVs to be for everybody, not just for the wealthy.
If, in fact, gas prices continue to climb off of that OPEC production cut, do you think that can be a catalyst for EV sales moving forward? Or was it the last time we were sitting at $4+ a gallon?
Yeah, I mean, I think a true panic point might be something maybe north of $5 or even $6 a gallon. So we've got a ways to go still, but the momentum is there and the regulations in place to really force it on consumers who don't want it. It's going to be interesting by the end of the decade how many Americans are going to just go ahead and buy an EV even if they don't want to, because they may not have that much of a choice. And look at the Buick and Cadillac brands, for example. They'll be all electric by the end of this decade. So it's kind of that battle of, will the market accept what versus the regulation? And of course, policymakers want to do this for environmental reasons, understandably. But we need more choice. We need more product. We need more infrastructure. That's one thing that was in President Biden's infrastructure bill. And now we've got the IRA tax credit, which we'll find out on April 18th for sure what vehicles are truly eligible for either all of it or at least half of it. But until you get more lithium processing out of China, I don't see too many vehicles getting the $7,500. Though GM says that at least some of theirs will be this year.
Indeed. All right, got to leave it there. Morningstar David Whiston, good to see you, sir. Thanks so much. Coming up, protecting your portfolio. Cash was pouring into ETFs in the first quarter of the year, but with the second quarter underway, more investors are wondering where they should put their money. We'll have the answers for you next.
The second quarter of the year is underway, and we're looking at the performance of ETFs so far. The cash pouring into these funds in Q1 standing at right around $80 billion. That's according to the latest data out from VettaFi. Well, let's break down where investors have put their money and where they should going forward. For that, we want to bring in Todd Rosenbluth, VettaFi Head of Research in this week's ETF report brought to you by Invesco QQQ. Todd, it's great to have you back here in studio. So let's talk about two areas that investors were favoring, where they put their money into during the first quarter. What was that?
Yeah, the largest chunk of money went into fixed income ETFs. Almost 2/3 of the overall inflows went into this category. Now, there was a flight to safety overall, concerns about where the interest rates were going and where the Fed was going to act next. And so fixed income ETFs were a nice safe haven for many investors. The other area that we saw interest in was also with international equities. So we've had a long home bias for U.S. investors. To start the year, we saw a stronger interest in international equity ETFs. Almost $30 billion overall flowed into that overall category. And we saw both a combination of developed international investment interest in Europe in particular and emerging markets. So strong interest overall.
Given the current dynamics, is that still a wise plan moving forward?
Well, what we've seen at VettaFi, when we look at some of the data that's come out, we're seeing sentiment shift towards U.S. equities and away from international equities. We're starting to see investors get a little more confidence in the U.S. equity exposure overall. They're looking to rotate. But the big gainer that we saw in international equities was BBEU. This is a JP Morgan Europe ETF, low cost, 9 basis points for the fee. Really strong interest overall in developed international companies like Nestle leading the list, exactly the high quality companies that you'd expect. And within fixed income, one of the ones worth highlighting is USFR. This is a Wisdom Tree floating rate treasury ETF. For investors that are concerned about the rising rate environment and looking for a flight to quality, you get 5% yield with this Wisdom Tree ETF, and we're really starting to see investors see that as a safe haven where you can get stable income while you try to figure out what's next within the fixed income world.
So Todd, these are outperformers in Q1 just in terms of attracting money. It sounds like you think that trend is going to then continue, at least for the current quarter right now.
We do. We're starting to see a rotation into U.S. equities. I think we obviously saw a much stronger March from a performance standpoint. And we saw outflows for U.S. equity ETFs in the first quarter of the year. That doesn't happen too often, especially when the market, the S&P 500 is up over 7%. But what we did see was a flight to quality within the equity space. So an ETF like QUAL, which is an iShares ETF, was actually the #1 net inflow gainer. Overall, QUAL holds high-quality companies, strong balance sheets, stable earning streams, return on investment being a focus for them, and it's performed well. It actually outperformed the broader S&P 500 in the first quarter of the year as investors looked for a relatively safe haven within the equity space.
And IAU, tell us about that.
Yeah, so gold ETFs in particular were out of favor. Commodity ETFs in general and gold ETFs in particular. And that's a bit surprising. We would have seen money go into gold as a safe haven. That's the theme I've been talking about today. But we haven't seen that. Investors are looking for other alternatives. So that's a bit of a concern to us that maybe they've shifted away from gold. They've gone to managed futures products. They've gone to alternatives. Obviously, crypto has been a much stronger performer than gold this year.
What do you make of that?
I think it's a bounce back from the really poor performance that we saw in 2022. But there has been interest. We've seen a renewed interest in crypto ETFs, in the underlying ETF, BITO, the ProShares ETF, but as well as the equity-related products that are tied to crypto. So more than gold in particular, and that's a bit surprising in this environment.
Sure.
Todd, what about oil? Because just on the heels of the news yesterday, OPEC Plus cutting production further. Obviously, we saw a pop in crude, and a number of the larger U.S. oil players also rose yesterday. What's the investment play there, do you think?
So the way that we're thinking is an opportunity is an ETF AMLP. So the MLPs, the midstream companies, they make money whether oil is rising or falling. These companies have been buying back their stock. They've been raising their dividend over the years. It's actually been a stronger performer than the broader energy sector this year and investing in oil because to come back to it, it is again a safe haven within that energy space. So AMLP is an ETF worth paying attention to within the energy sector.
All right.
All right, Todd Rosenbluth, great to have you. Thanks so much for joining us here on set. Well, Richard Branson's Virgin Orbit filing for Chapter 11 bankruptcy protection today. We want to bring in Ines Ferre, who has been following this story for us. And Ines, what can you tell us?
Yeah, Shauna, as you just mentioned, Virgin Orbit, not to be confused with Virgin Galactic. In fact, Virgin Orbit had spun out of Virgin Galactic back in 2017. The company went public in 2021 via a SPAC. And Virgin Orbit is a company which launched small rockets, offering launches from pretty much anywhere. In January, the company tried to launch from Britain, and the launch was not successful. The rocket and 9 satellites fell to Earth. Those satellites belong to Britain, to the United States, to other countries. And this was a big failure. And it was a big deal at the time as well, because it was the first time that it was trying to launch from Western Europe. And Virgin Orbit was trying to establish itself as a big player. Now, earlier in March, Virgin Orbit said that it was trying to find a lifeline, a fund lifeline, and it had to furlough workers as it was seeking funding. It was not able to obtain that funding. And last week, it announced that it would be ceasing operations and it was laying off most of its workers. Look, the bottom line is that it is more expensive to borrow capital with these higher interest rates. In fact, it's estimated that VC investments in space ventures are now down 50% year over year. And that's according to VC firm Space Capital. The CEO of Virgin Orbit also in a court document said that the changing capital market and higher interest rates environment made obtaining new capital difficult, also noting that heavy pricing pressure from well-capitalized competitors in the commercial launch market made it difficult for Virgin Orbit. It competed with other companies like SpaceX, for example, Rocket Lab, and United Launch Alliance.
All right, Ines, great job. Thanks so much for breaking that down for us. Coming up, we're counting down to the closing bell on Wall Street, the final 5 minutes of the trading day. We'll be right back.
Oil prices spiking after OPEC Plus members announced a cut to production by an additional 1 million barrels per day.
Just taking a look at what Wall Street analysts are saying about this surprise announcement, they are basically now expecting oil to go up through the end of the year.
Yes, of course. Whenever you increase the price of the base product, crude oil, that goes into making gasoline, it's going to get worse. What has been a very slow-burning Cold War between Saudi Arabia and the United States.
We have to see how this OPEC news sort of trickles in, whether it will create winners and losers again based on the rise in oil prices.
Some people are pointing to this cut and saying, well, look, it's going to be taking so much production out of the market through the rest of this year. Regardless, OPEC is focused on stability in the market here. They don't want choppiness. They don't want volatility.
Elevated energy prices, another recession factor there.
Of course, the big question is what this means for the Fed's fight against inflation.
It actually sort of confirms that we're likely to see 2 25 basis point hikes, with oil prices likely to be moving higher. Inflation will continue to be a thorn in the Fed's side. I think the real question is, how deep will the recession be? And I think one of the main factors will be, how long does the Fed continue to raise rates?
All right, we're just under a minute here until the closing bell. Taking a look at where things stand right now, you're looking at all three of the major averages in the red. The Dow off just around 204 points. S&P off about 0.6%. We're also seeing some of those larger cap tech names under pressure today, with the Nasdaq also off just about 0.6%. So a halt here to the 4 days of gains that we were seeing over the last 4 trading days. In terms of the sector action, how we're seeing that play out this afternoon. Some weakness in financials. The XLF off just over 1% this afternoon. The biggest losses here are coming from industrials and energy. Energy off just about 2% today as we take a look at the price of crude, and crude hovering just around $80 a barrel.
And there's your closing bell on Wall Street. Let's do a quick check of the market, sponsored by Tasty Trade. How did we close on this day? All red on that board, with the Dow leading the way to the downside, dropping almost 200 points, led by Caterpillar. Shauna, down almost 5%. I'm going to have to dig into what exactly happened to Caterpillar today. The S&P falls 24 points, and the Nasdaq dropping 63 points. Micron down 4%. Tesla also down more than 1%. A nice bounce back for Electronic Arts. EA up 3%. Again, that brought to you by Tasty Trade.
All right, let's dig into some of these individual movers. And one of the first is AMC, the theater chain, reaching a settlement to convert its AMC preferred equity units, known to the street as APE shares, into common AMC stock. Now, the company also planning a 10-to-1 reverse stock split as part of this settlement. AMC shares, you can see, off 23% today. APE shares up just about 13%, exactly the moves that you would think to see on the heels of this news, Dave.
One will come up, one will go down. They will meet somewhere in the middle, converging towards one another. It's just amazing, Shauna, how often we talk about AMC without actually referencing the movie theater business, which is actually beginning to show some signs of life. Box office numbers up 44% for the quarter. Compared to 2022, that far exceeded expectations. And don't forget, Amazon and Apple committing $1 billion for big box office movies over the next year. All right, let's take a look at C3 AI. Always a mover at this time of the day. Shares of the software maker seeking today as short seller. Curisdale Capital pens a letter to C3 AI's auditor highlighting, quote, serious accounting and disclosure issues. C3 AI entering today's session on a tear, though, up more than 200% this year prior to the announcement of the letter, but shares now closing down more than 25%. Now, C3 AI has not responded to Yahoo Finance's request for comment.
Yeah, and Dave, this news, of course, comes on the heels as there has been a lot of debate recently about the safety or lack thereof of AI and some regulations potentially that need to be put in place in regards to AI as we move forward. Well, President Biden, he held a meeting today at the White House talking about some of the risks and opportunities. He did this with a council of science and technology advisors. Some of the headlines coming out of that meeting, President Biden saying that tech companies do have a responsibility to make sure that their products are safe before making them public. He also said that it remains to be seen whether or not AI is dangerous. So not so much taking one stance versus the other on AI. And certainly this is a conversation that's going to continue for quite some time, given the fact that there are so many concerns about the risks that AI can potentially pose.
And that's why Elon Musk and Steve Wozniak and Andrew Yang and tech leaders from around the country wrote that letter, the Future Life Institute, I think it is, saying we need a 6-month pause on AI. Bill Gates, for one, weighing in, did take sides, saying, no, we should not take that pause. It will solve the challenges ahead. He says it's just too difficult to navigate how that pause would work globally. So he did, in fact, weigh in on the presumed pause.
All right, let's also take a look at some of the airline names. Many of the domestic carriers closing in the red today. You can see American Airlines off just almost a 2% drop. Now, the move here coming after Jefferies was out with the note saying that the rising cost of oil does threaten 2023 profits, which cut its EPS targets for the year by 10% on the heels of OPEC's recent production cut. When you take a look at the losses there across the board, certainly a lot of concerns throughout the sector, what exactly higher oil prices are going to mean. And so many of these airlines that are still struggling to really continue to the upside, given the fact that some consumers, we're starting to see a bit of a trend where some consumers are pulling back on their spending, specifically what they were once spending on airfares.
Yeah, you're starting to hear analysts say it appears to be coming to an end, that revenge travel we've seen so much of. Again, United, the big drop there, but also on American, reducing their New York flights. That includes reducing flights between LaGuardia and Dallas, Miami, Kansas City and St. Louis, also reducing their flights from Newark Liberty to Chicago. So a severe reduction, because there were fears that this would be, again, as you've heard it before, another summer of travel hell in the New York City region. So a significant reduction based on FAA guidelines and regulations here in the New York area. Elsewhere, former President Donald Trump pleading not guilty to 34 felony counts earlier this afternoon, marking the first time in U.S. history that a former president is facing criminal charges. But how much do today's events alter the political landscape ahead of the 2024 election, if at all? To help us answer this, Niall Stanage, the Hill White House columnist, joining us now. Nice to see you. How do you, as you watch today's events, extraordinary history unfolding before us, how do you feel this impacts our political divide?
I think there are a couple of ways, really. The first is just watching these events unfold today. The imagery itself is so striking. Yes, of course, we anticipated this day coming. We've known about it for several days. But when you actually see former President Trump in a courtroom or walking through the halls of the criminal court in Manhattan, it does hit differently. Now, against that, the legal documents that I'm reading so far don't contain a whole lot of surprising or unexpected information. So politically, we still have to see how this plays out. Obviously, he's a candidate for the presidency again. There is some possibility that Republican voters might rally around him. How this plays with the general public, with an eye to a possible future presidential election, that's a more complicated question.
And now, taking that into account, I guess, how do you see it potentially doing that? Because I think one of the massive arguments out there is that it's actually going to damage him in the general election if he is the GOP candidate.
Yeah, I think that is a real concern from his side, Shauna. There are a number of elements to that. One is the fact that, of course, he did struggle badly with female voters in 2020. He lost suburban women by almost 20 points. So we know this case is going to stretch on for a long time. Maybe he'll be convicted, maybe he'll be acquitted. But what we are going to be hearing a lot about are rather lurid accounts of alleged extramarital affairs. Is that going to hurt him further, particularly with female voters? So that's one issue. The other is Republicans worried about having a potential nominee who is under criminal indictment, who is charged with a crime. That, to a general public, to the general election electorate, has obvious dangers.
For the time being, his potential opponents have rallied around the former president. I'm talking about, of course, Ron DeSantis and Nikki Haley and Mike Pence. What could change that dynamic?
One thing that could change it, I think, quite readily is if the former president or people close to him engage in very inflammatory rhetoric. There's already controversy, which you may be aware of, about a social media posting from the president's oldest son, Donald Trump Jr., which includes a photograph of the daughter of the judge in this case. That kind of thing, anything that is redolent of some sort of incitement, I think, could change that. Obviously, the former president has already suggested that there could be death and destruction. That was before he was even charged. So that kind of rhetoric, I think, does add to a sort of atmosphere of chaos around him. And we're seeing other candidates or potential candidates put themselves forward as conservatives without the chaos. Those kind of appeals could get louder and sharper if this goes on.
Now he's expected to return to Florida, speak tonight at Mar-a-Lago, talking about rhetoric. What do you expect his rhetoric to be tonight?
Well, Donald Trump is Donald Trump. His rhetoric is what it is. I would expect to hear a lot about political persecution, as he calls it. I'm sure he will contend that he's a victim of a politicized witch hunt. And in saying these things, there is clearly an audience that agrees with him. I mean, he is still very popular with Republican voters, and I'm sure that they will be further inflamed or revved up by that kind of rhetoric. One aide, Jason Miller, says that his campaign has raised $8 million since news of this indictment broke a few days ago. So that points to the support that he still has, and he will be wanting to solidify and intensify that support with whatever remarks he makes this evening.
How indicative of our times is that they are raising money on indictment to pay off a porn star. This is the Republican Family Values Party. Just going to let that sit. What do you make of the timing here? Legal experts tell me it's probably a year before trial, which brings us right into primary season with this trial playing out.
Yeah, it absolutely does. And that's a really important point, Dave. We're now going to have the front runner for the Republican nomination going through potentially that entire process while under criminal indictment. Now, we do have to put a couple of caveats around that. It's quite plausible that his lawyers will seek to have the charges dismissed, for example. But he will be going forward while presumably attacking this process, but while having to also fend off these charges. This, once again, with Donald Trump, is going to be the kind of primary season that we have never seen before. It's really an unprecedented situation. A former president trying to seek the office again while charged with a crime. I mean, we're really, it's such a cliche, but we're into uncharted waters yet again.
Yeah, how possibly could he run essentially from the courtroom?
Well, he could run by saying that he is a victim here, and he has painted himself that way already. He has also tried to expand that argument to suggest that liberal or democratic elites are pursuing him as a way to thwart his political ambitions and thereby thwart the people who support him. So there's this idea put forth in Trump circles that that sort of mysterious forces are trying to get him to punish or to push back against his people, to punish his voters. Whether you believe that or not is an entirely different matter, but certainly that paradigm is put forth a lot by the Trump people.
I don't mean to lessen these charges, because reading through the indictment, this is undoubtedly a crime, but in comparison to the potential far more serious Georgia election investigation, could this have some impact on that?
Yes, it could. I mean, I take your point that Georgia in particular is just far more serious in terms of the underlying behavior. It's very difficult to argue that hush money payments to Stormy Daniels in any way endanger American democracy. I mean, they may be a crime, but they're not existential questions. In Georgia, you have a taped phone conversation of the then sitting president of the United States calling the Secretary of State and asking, threatening really, that person to find enough votes to overcome President Biden's margin of victory there. That seems on its face a much more serious case. Now, you could argue perhaps that by Alvin Bragg having gone first here in Manhattan, perhaps it makes it easier for the prosecutor in Georgia, Fani Willis, to go forward. But the flip side of that is the kind of shakiness of this Manhattan case, honestly, will clearly be used by President Trump and his allies, former President Trump, to portray all of these probes as part of the same picture, a picture that he considers unfair and victimizing of him.
Yeah, one could argue it makes that case more difficult to present if, to your point, if in fact this doesn't go all the way. Love to continue this conversation. Really enjoyed it. Niall Stanage, the Hill White House columnist. Thank you, sir. Appreciate it.
Thanks, guys.
Coming up, the tech-heavy NASDAQ is off to a hot start in 2023, but our next guest is not buying it. Find out why when we come back. New research from Torsten Slok, the chief economist at Apollo Global Management, the parent company of Yahoo, showing that the top 20 largest stocks in the in the S&P, 500 added nearly $2 trillion in market cap this year, while the remaining 480 stocks have added less than $200 billion. Tech names like Nvidia, Meta topping that list of outsized growth to start the year. Here to discuss that and more, we want to bring in Lee Munson, joining us here on set in New York from New Mexico. Lee, it's great to see you. So let's talk about the outperformance that we've seen, because I don't think many people saw this coming. A lot of the larger tech names leading the charge. He didn't see it coming, man.
I mean, please.
Put him on the spot here.
My God, I'm a value-oriented player. I mean, this is like, your worst nightmare coming off of 2022, where I'm killing it in value. I'm killing it in industrials and materials and finance. And now it's like, and now this, right? So here's the thing. I've seen this before. And granted, if everybody bought Nvidia a few months ago, congratulations, you won, right? If you were just long deep in all that stuff that was down 70, makes no money, and can't borrow cheap, you won. But here's the thing. Back in 2000, the good old days, back that dot-com thing, when I was young and my hair wasn't gray, you saw all these internet stocks, just, all the speculative hot stuff. This happens every bear market. For instance, Qualcomm, summer 2000, it's down 70%. Then it spends months basing. Exactly what happened to what the semis did back in October, right? And then what happened by the end of summer in 2000? It doubles and then it starts to break down again because reality started to set in. Now, if I was still in my 20s running a hedge fund, I would be pissed off if I had missed the run in semis from October, or just the general FANG stocks, the Sweet 16, as we used to call it last year, that have been jacking up the S&P. I mean, 160% of the performance is just from a few names. But here's the thing. I think that that's a trade. I think that the idea of buy tech on Fed cuts is a false narrative. I think we're going to get an earnings fake out, and this cycle isn't done. I've been doing this for a long time, and you have to be a little patient. Now, if you're a trader, whatever. If you don't care about taxes and you want to get in there and do stuff, that's fine. But I would not be buying tech up here. The relative valuation is higher now than it was at the November peak in 2021. Relative to the S&P, and higher than it was back in 2018, 2019, right?
Which is bonkers. So you're sticking with quality.
Well, value, yeah, quality. And what I want to do now is I want to buy all this stuff cheap. I think that by the end of the year, we'll see, what's going to happen. We'll see if tech can really hold all these gains based on one thing. What's this one thing? The earnings are going to accelerate? Right? That we're going to have more growth going ahead? We've revised year-over-year earnings down 6.6%, right? Let's just make it 6.66 for fun, okay? It's not enough. And you get FactSet talking all about, this is, we've never seen a year-over-year reversion, the revisions coming down. It's more than the 5, the 10, the 15, the 20. Yeah, you know what? .com was 23 years ago. So maybe the people there, weren't around to see, the cray-cray back 23 years ago, but I think this is going to be similar. I just don't think it's going to be quite as bad.
What about AI? Ann Barry told us she fears there's a potential bubble
You're
there.
laughing.
So, I don't often get much laughter when it comes to AI.
I think it's
You're
hilarious.
not chasing it.
No, it's just like, why not just talk about 3D printing or something? It's like, it's fine. But I think that the AI thing is going to be run and dominated by places like Microsoft, right? Facebook. The bigger getting bigger. It's the same thing in the value world. The Bank of Americas of the world, the JP Morgans, they got the billions flowing out of Silicon Valley Bank, and it's just going to be a size thing. So I wouldn't go chasing around. I think a lot of this stuff is just a bunch of fraud and hoopla. But if you can make a buck, it's Wall Street, it's fine. But for my clients, I'm already rich. I want to stay rich. And so when I think of investing in some hot little AI thing, it's like, I don't know.
Well, Lee, why do you think so many investors jumped on the AI bandwagon, given the fact that there are so many risks out there? There are so many people like you saying that this is just going to be a fad, at least in terms of the investment opportunity right now.
Because we just had a major catastrophe in speculative crap. And so when you get something like this, that is just a memification, right? It's not, buying NVIDIA on a massive bounce. It's still down 40% from the highs of December 21, by the way, but still, it's something new and shiny that people love. And this happens in every bear market. You get the speculative stuff that crashes, and then it starts bouncing, and then you'll get this other little subsector, some little last gasp, right? It's kind of like Bitcoin surging up again. It's like, here's the, Dogecoin is on the Twitter, it's like, don't get me started, right? How is AI any different than that, right? Well, a million ways it's different. A million ways it's different.
Dear God, thank you for saving yourself there. I'm
talking about the animal
kick him out of the studio?
That you would have had to have leave and never come back.
Get out of here.
You literally would have lost all
Friend of show no
credibility
more.
for the rest of your life. I do have to ask you quickly about the Jamie Dimon letter. Another thing we love. The banking crisis is not over yet, but you dialed in on the lending conditions and what that means. What stood out to you in this letter that was consequential?
I was very interested how he was talking about what lending should not, we need to ask ourselves. He's posing the question. And when I read it, I was like, is that a rhetorical question? No. Should all lending be inside of the banking system? Market making, things of that nature. I think it's a good question because what his point is that obviously it should, because when people are in need, the shadow banking, the non-bank, they're not going to come in here and save it. There's no, there's no difference and there's no central bank for cryptocurrency. So, but what he is saying is that a lot of basic credit, basic lending, it's no longer profitable for banks to do this. And I think it's phenomenal that some guy like this is talking about this. He's saying should mortgages really, it's a struggle to make a buck at JP Morgan or Bank of America, or look at Wells Fargo. They're just cut, right? They just want to get that mortgage stuff down. And he said, the crazy thing was, he said, we've got to start doing other things to make money. And the thing that spoke to me when he said selling big data, right? Selling information about our clients for filthy lucre. And that is going to allow them to do mortgages because they're so expensive. He said, mortgages are so expensive and we can't make any money servicing and we can't do this and can't do that. So, you can draw your own conclusions, but, the man is saying, we're going to be in other related businesses on understanding everything about you and selling that to increase our margins that we can't make on, Basel III, Basel IV.
That's terrific news.
Yeah, so that's a little worrisome when you step back and think about it. Lee, since we have you here, there's been certainly no shortage of surprises in the markets really over the last couple of years, but even just the last several weeks when we talk about the banking crisis, we talk about what happened with OPEC this week. Anything on your radar or anything that you think could potentially really send a shockwave through the markets as we look ahead, not only to this month, but to the rest of this quarter?
Well, here's what I think that are the biggest risks that I'm concerned about. The reality is going to set in after we get, no Fed meeting this month, right? That the Fed's going to keep raising rates a little bit, maybe a couple more times. I think reality is going to set in that the earnings revisions aren't enough. But the real thing that I think is going to be a problem is if we see a reversal of inflation coming down and it starts to spike up a little bit, like we see in some of these Scandinavian countries, like we saw in Spain so many months ago. We've got this oil problem. I mean, the Saudis and OPEC, they're nobody's fool, right? They want to make the money and they're going to push this thing, right? They don't want to see demand destruction in terms of like demand for how many dollars they're pulling in. So I think that the biggest risk is not having inflation come down too much. The biggest risk is not, do I have too much value stocks when I should just be, buying up the semis at huge valuations? I think the big risk is if we get into the summer months and we have a little spike up that might be commodity oriented. And that's not what people are thinking right now, right? Everybody's thinking commodities are dead. Everybody's thinking buy tech on Fed cuts. And if that reverses just a little, people just get a whiff of it, it's going to be summer fun.
I hope you're wrong. I gotta say.
I hope so too. I'm overweight and here to make money this year.
Lee, it's always great to have you. You gotta come back and visit us more often on set.
This is my first time back since COVID. Can you believe it?
Oh, I know. Years. You got to do it again soon.
I'll be back. I'll be back this summer.
There we go. You heard
Can't
it
wait.
first. All right, Lee, great seeing you here. Coming up next, Apple CEO Tim Cook has taken the world's most valuable company to new heights. Find out how he's shaping the tech giant's future when we come back.
The genius of Apple may have started under Steve Jobs and Steve Wozniak, but the impact of current CEO Tim Cook is undeniable. Just take a look at the stock price. When Cook took over, his share went for a little over $13. That has now popped to more than $166 a share, an increase of more than 1,000%. Our next guest got the opportunity to sit down with Mr. Cook for an exclusive interview. Zach Barron, GQ senior staff writer, joining us now. Good to see you, man. So your impressions of sitting down with Tim Cook, your first impression, what surprised you?
Well, I think you mentioned he's sort of Steve Jobs' successor, right? And so when he starts, I think there was a comparison that was frequently made, and it wasn't always flattering to Tim. I think, Jobs was seen as this sort of charismatic Steve Jobs-like figure, Walt Disney-like figure. And Tim Cook comes from operations. He's thought of as a kind of, spreadsheet guy, numbers guy. And the thing that when you sit down with him that you kind of realize is that he is kind of an equally, in my opinion, charismatic leader. Very fun to be around. He's from the South. He's got that courtly manner, and I find him very impressive and very likable.
Yeah, and Zach, speaking of that demeanor, as something falls in the studio here, speaking of that demeanor, though, what you learned in terms of his leadership, because you talked about his calmness, how that contrasts to so many of the other leaders out there, including Zuckerberg, including Elon Musk. What was your big takeaway there?
Yeah, I think that maybe there was a time where we were like, all these guys in Silicon Valley are here to save us, and they're all going to protect us and take care of us, and they're all here for the best reasons. And I think we've learned as a society that that's not the case. And the thing about Tim that I think is really cool is he is a very even personality. He's a giant company. Everything he says is listened to very carefully. He's a very influential guy, but unlike some of his peers in Silicon Valley, he's not out here making wild claims about the future or speculative businesses. He is a very steady, very grounded person. And I think increasingly in that place, it doesn't feel like there are a lot of adults, and Tim is an adult.
So, of course, Steve Jobs was all about the defining device of our generation, the iPhone. And Cook really has been services, has been his signature. You write, though, when it comes to product, there's still the feeling in some quarters that he is one transformative product away from history. What that product is in the end is endlessly speculated about. I would argue that AirPods have changed life as much as anything since the iPhone. Do you get a sense what that could be? The VR, AR goggles that have been rumored about for months now, potentially launched in June.
Yeah, so people who know Apple will know that Tim Cook is not in the habit of sitting down with journalists and confirming upcoming product releases or service releases or anything they're rolling out. Apple's a very secretive company. That said, those rumors are out there, and we talked about it. I said, okay, look, you're probably not going to confirm this. And he's like, I don't know what you're talking about. But I said, okay, let's talk about the potential of VR AR, which is the device you're referring to. The rumor is it's called the Reality Pro. They may or may not be doing it. I cannot confirm. But I asked, why would you be interested in such a thing? And he talked a lot about how the augmented reality capabilities are something that he and Apple are interested in right now. He talked about overlaying the digital realm onto the physical realm. This is a company that's very interested in creativity, very interested in collaboration, very interested in creating stuff. I think that his view is we could have the sort of work days, the creative days that we have now, but better. We could overlay the thing that we're working on and both look at it and play with it in the digital realm, kind of while being in the physical realm. We could measure something. We could see art on a wall. There's all these sort of capabilities to do work in new ways and to do creative stuff in new ways that AR could allow. So he was like, I'm very interested in this. Are we doing something with it or not? I can't say. But do I think there's a lot of really interesting stuff going on with it? I think he does.
Well, speaking of products, obviously iPhone, a massive, massive hit, just to put it lightly, for the tech giant. We talk about one of the concerns here, and that is how addicted people are to their phones. I know you talked to him about some of the concerns that you have with your kids watching the screen so often. He said, quote, if you're looking at the phone more than you're looking in somebody's eyes, you're doing the wrong thing. What did you learn just about how we should be using our phone and any advice he gave on how we best regulate it for our children?
Yeah, so the first time I interviewed Tim Cook was a few years ago in the deeper pandemic phase. And it was at a moment where I was like the conflicted relationship with my iPhone. I was very addicted to it. And I said, what do you do about this? And he was like, well, I hear what you're saying. I turn off all my notifications. I suggest you do the same thing. It's very rare that you need to be interrupted. Did that. It was incredibly helpful. Since that time that we spoke for the story, in between those two times, I had a kid. My kid is fascinated with my phone. So I went back to him. I was like, he already follows it around the room. My kid wants to play with it. He wants to look at it. What do you suggest? And he was like, gently was like, we have tools to help you. There's screen time, there's parental controls. But more generally, he was like, we make these things to help people create stuff. We make these things to make people's lives better. We don't make these things for you to look at them all the time. We don't make any more money if you do that. So his primary advice was really as a parent, set guardrails on your own. And gently, and then not in a rude way, was kind of like, maybe you shouldn't have your phone out around your kid all the time, which I thought was really good advice and was sort of, he had a good perspective on where the line of responsibility ended with the device and where it sort of picked up with the parent that maybe I didn't want to hear, but it was useful to hear. Let's put it that way.
Yeah, Zach, I can relate. I have the same exact concerns. I have two young boys, and every time I bring out the phone, they're always trying to see exactly what's on the screen. So some good advice there from Tim Cook. We just got to put it away. Zach Barron, great to have you, GQ senior writer. Thanks so much. New York's International Auto Show kicking off tomorrow. Pras Subramanian is here with us. Pras, a number of the larger automakers, Dave and I will also be there tomorrow. You actually spoke with Nissan, one of the heads there of their EV strategy and senior director of transformation. What did you learn just about Nissan's push and where they stand amongst so many of their competitors?
So Nissan, like everyone else at this year's show, EVs are all the rage, right? EVs, no surprise there. So I had the chance to actually drive Nissan's newest EV, the Aria e-Force. This is an all-wheel drive version of that car that they came out with. And, very impressive car, nice looking, I think nice exterior style, good interior, very comfortable, almost luxury-like in nature. And again, this is the all-wheel drive version which just came out. The problem with this car is it's over a year late, right? So I spoke to Aditya Jairaj, who is the Nissan's head of strategy, about what happened here and where are they right now.
We had some issues with our supply chain network and all these the issues that plagued us around the supply chain last year. So now we're in market. We sold our first car in December, and I think it's fair to say that every Nissan dealership now, EV certified dealership, has an Aria.
Oh, okay.
Yep.
Okay. They have at least one for sale.
That's correct.
We were actually driving, by the way. We were not just parked on the street. But,
I was going to call that out.
We were going about 5 miles an hour in Manhattan traffic. But anyways, real quick, I want to mention the fact that we talked about pricing. And I said, are you going to match Tesla from their price cut point of view, the Model Y? And he said, no, actually, we're pretty consistent here. Our car starts at $47,000 with all-wheel drive and $53,000 with the extended range. And that's very competitive with the Tesla Model Y. So they said, we're good here. We've priced it accordingly. We're fine with that. And this goes on sale now. So it's already in dealerships.
Exciting. Also tomorrow, the New York International Auto Show. Shauna mentioned we'll both be there. What should car enthusiasts look forward to?
I have 3 cars that I'm really kind of looking forward to, right? One you're going to love this, the Ram 1500 Rev, the EV version of the Ram pickup. That's going to be there. First time in New York. I have not seen that thing in the flesh yet. We'll see that there, the Lightning and the Silverado all together. So you'll be able to see what you kind of prefer and what you want to look at. Secondly, I think the Genesis GV70 Coupe. This thing is just beautiful. This is an EV concept that I think is going to come out very sporty. Extremely kind of the edge of the kind of turbo Taycan or I'm sorry, the Cayenne Porsche kind of end of things. Very, very sporty car with that nice kind of I believe that's a nice cross-stitching on the sports seats. And finally, I think the Kia EV9, that debuted a few weeks ago in Korea. We're going to see North American debut here in New York. This, in my opinion, three-door SUV. It's going to be competitively priced for that car. It looks like a Land Cruiser, back like old school Land Cruiser, but kind of updated for the modern world. Three-row SUV. It's going to have around 280 miles of range or so, and in a higher end version, almost 400 horsepower. So a really capable, I think, very attractive car. I think that they'll do well in America.
Exciting. Can't wait to check all that out. Proud, it's good to see you, sir.
Can't wait to see you guys there.
Yeah, man. I'm hopping in some of that. All right, so be sure to catch all our coverage of the New York International Auto Show, kicking off at 9 a.m. Eastern Time. We'll speak with auto execs like Hyundai Motor America CEO Randy Parker and Ram brand CEO Mike Koval Jr. You don't want to miss that. But coming up, the metaverse remains a hot topic in the tech sector, but what role does it play in our future? Our panel tackles that question from all sides next.
Is the metaverse just a fad, or is it here to stay? A new Piper Sandler survey of teens found that only 4% of those with VR headsets use the technology daily. Well, that cannot be good news for the future of the metaverse. So if teens aren't even in on this, will the metaverse really shape our future? Let's got a debate going here. We got all sides covered on this. James Au, author of the upcoming book, Making a Metaverse That Matters. We have Adam Voss, Surreal Events co-founder and chief marketing officer, and Yahoo Finance senior tech reporter, Ali Garfinkel, all here to weigh in. We'll go around the horn really quickly. James, first to you. You sound a little bit more bearish. It seems like you're all in on the metaverse. Why?
Yeah, well, I think the last 2 years of metaverse hype has been driven by people who haven't really read Snow Crash, but Snow Crash has been the kind of defining guide for people who building and trying to build a metaverse for the last 30 years. One of the points immediately that jumps out is VR was really never intended, as it's conceived by Meta, to be what the metaverse would be accessed by. So it's kind of like Meta bought Oculus and they decided that that was going to be what the metaverse was. But if you read Snow Crash, standalone VR headsets are only used by the wealthy and hardcore geeks. So they kind of had this lost leader where they just are making a huge mistake right from the beginning of how the metaverse actually works.
All right, so that's a bullish case there. Adam, let me go to you because you're also a little bit on the fence, maybe in terms of how this is rolled out, but more so just make your overall case whether or not this is a fad, if it's the future, or what you need to see to be convinced.
I certainly don't think it's a fad. I definitely think it is as nascent as social media was in the mid-90s and has even a more greater potential for growth, combining, identity, embodied presence, as Charlie Fink for Forbes likes to say, community, narrative, immersion, and multiple ways to interface. I don't think you need a VR headset. In fact, I think reducing the friction and creating browser-based applications to enter these platforms are more effective.
All right, Ali Garfinkel, you and I are in the same camp here, and I reiterate that Piper Sandler stat. 4% of teens that have a VR headset are using it daily. Why are you so bearish?
Well, Dave, you're actually just making my case for me. The reality is that the argument I've heard over and over again from metaverse experts is that this is for kids. The metaverse is for kids. They are the ones who are going to be using these headsets. They're going to be the ones who are operating in the metaverse in ways adults are not. However, if kids aren't using these VR headsets, that's still people's primary way of understanding the metaverse. And if we want to talk about the headsets themselves, right, let's talk about that for just 1 second, right? These headsets are expensive, and we know they are too expensive because, for instance, the MetaQuest Pro was cut from $1,500 to $1,000. The look on your face, Dave just went.
Still a heck of a lot of money.
It's still a heck of a lot of money. There are a lot of Americans who can't afford a $400 emergency expense. So what? They're going to go out and buy a MetaQuest Pro. They're also, this is just my personal opinion. I also have found them incredibly uncomfortable. I am also prone to, I don't have metaverse legs, I believe is what they are called, where when I am in the metaverse, I actually will get nauseous. And until they actually get that tech in line, I think it's going to be a tough sell for a lot of people.
All right, so lots of questions here about how exactly this is going to be potentially incorporated in our everyday life. James, what is the use case for the metaverse?
The main use case for the metaverse is the metaverse itself. And if you look at the numbers, conservatively speaking, at least 500 million active users of metaverse platforms. And that's just from Western-based metaverse platforms alone. It's actually a lot larger if you look at usage in Asia. So really, if you follow Neil Stephenson's definition of the metaverse as a vast immersive virtual world with user-generated tools and customizable avatars, that is already huge. It's at least 1 in 10 of the population online, and it's going to be 20%, 25% of the online user base. And again, that doesn't require a VR headset. Neil Stephenson himself said, actually, it doesn't need that, and that I assumed it would, but then Doom came out immediately after Snow Crash came out, and I realized you don't need VR headsets. So assuming it requires a VR headset, you're just kind of repeating Meta's assumptions, and as we've seen, they're failed assumptions. But Roblox, for example, has 250 million active users, a lot of whom are adults. It's probably about 50 million of those. So it actually has a much larger user base beyond just the kids.
All right, Adam, best practical use case.
More people have access to smartphones than they do to clean water. I mean, the metaverse as a channel for businesses and brands seeking engagement, for individuals seeking connection, for businesses to connect with their employees, as well as develop new revenue streams. For us, we look at it as a whole new channel that, despite the hype cycle spiraling to the trough of disillusionment, has a huge TAM attached to it that we haven't even started to discover.
You guys are actually getting into some of the questions that I have, because one of my biggest takeaways about the metaverse is that I actually think a lot of average people still don't even know how to really define it. For instance, does it require a VR headset? Actually, we're all sitting here and we're like, wait, it actually doesn't, because for instance, Roblox exists, and there are so many users on Roblox, which is desktop based. There's even Horizon Worlds from Meta, which is also desktop based. So I think that, you're talking about Snow Crash a lot, and I think that that's important, but also my real question is how we can really bring that definition to a broader audience, because the metaverse isn't just for sci-fi fans like you and me. So that's kind of where I keep circling back. What is the real definition here?
The metaverse is messy.
Go ahead.
Go
Adam.
for it. I'm sorry. No, I I start my book, Making a Metaverse That Matters, with a definition, which is, if you take it directly from Snow Crash, it's a vast virtual world with highly customizable avatars, user-generated content. It's connected to the real-world economy. In other words, you can make content and make a living from it. And really, I say it's like Roblox or Fortnite or VR Chat or Rec Room, but bigger. So these are platforms that are already working really well. They already have large user bases. They're already generating a lot of revenue. And they really fit the definition. It's a much larger user base than even Neil Stephenson imagined. So really just try Roblox or Fortnite or whichever one you're interested in.
Adam, what do you think?
Little M metaverse. I mean, we don't even use the big broad M anymore. I mean, really, metaverses include walled gardens like Meta, or gaming platforms like Fortnite, or open worlds like Decentraland. And until there is a code of interoperability that connects you as the avatar with your goods, with your payment platforms, with your ability to transact and communicate, we have all these disparate platforms, right? Well, as Lee Munson, who came on earlier, was talking about, the bear market drives the investment into these platforms. And these platforms are all, they're not connected. So they're all kind of silos that are wanting to be silos, especially on the brand side, because they have that access to data. So in terms of what Neil Stephenson was writing about, that connection won't come until we find a way to solve for interoperability between these platforms.
It'll also be interesting to see when Apple's headset finally launches. It's much anticipated. It's rumored to be in June. It'll be interesting to see if that starts to bridge the gap of some of the things we're talking about, include that operability piece of it, Shauna.
It certainly seems like we have a long ways to go before we could potentially see some widespread adoption here, and really everyone bought in on the metaverse. James Au, Adam Voss, Ali Garfinkel, thanks to all three of you for joining us here today.
Hey, thank you.
Thank you.
Well, coming up, Kraft Heinz is putting a new twist on ketchup. Find out how the company hopes it will spice up sales next.
Kraft Heinz is out with a new spicy ketchup lineup, all part of a bigger innovation push to drive $2 billion in sales by 2027. Brooke De Palma here with the details, but no samples No samples, Brooke?
No samples today, Dave. We didn't have fries. That's
like
why I couldn't bring
samples.
them on set.
John and I like free samples.
You do. You gotta turn down the samples.
But that's right. This is all part of a larger innovation push happening at Kraft Heinz. It's a 4-part lineup and includes 3 different levels of spices, and it hits shelves today, Tuesday, April 4th. It retails for about $3.99, which is in line with a more traditional ketchup bottle. It also includes a Heinz Hot 57 sauce. Now, this is the first innovation from Heinz Ketchup from their Hot 57 sauce lineup in 10 years. They're 14-ounce squeeze bottles for those 3 ketchups. And one Kraft Heinz executive telling me that personalized sauces, ethnic flavors, different textures are really the name of the game here as it bids for the attention of a younger generation, perhaps millennials. And on each one of those ketchup bottles, it'll include that is a pepper blend. He says that millennials are largely interested in the source of the heat, and so they felt like this was the right time to introduce this lineup as part of that big push.
Well, Brooke, when we talk about that, what are we hearing just in terms of what this could actually mean for the company's sales? How big of a driver could this end up being in 5 or 10 years?
Yeah, well, when I spoke to that executive, he's hoping that this is a major win for the company. Of course, here they're putting lots of money behind it, but ultimately, at the end of the day, what they told me is that they're being agile with all these innovations and introductions here. Now, this 3-part, or rather 4-part spice lineup is part of that larger push, but it's also part of the Taste Elevation portfolio, one of 6 portfolios that they introduced back in 2020. And this portfolio alone represents about, as you can see right here, represents 30% of the company's portfolio with over $8 billion in net sales. But it's important to note here that once again, they're looking to build $2 billion in sales by the year 2027 based on all these innovations. They also recently introduced a collaboration with Ed Sheeran here. They're calling it Tingly Ted's. That's another hot sauce. They also introduced home baked 425 degrees by 30. That's a sort of a fast baked, already pre-cooked meal. And so certainly we'll have yet to see just how much this drives sales. But at the end of the day, Kraft Heinz betting big on here, innovating, testing these things quickly, and getting them out to market pretty fast.
Yeah, I want to try these. Ted's Tingly Ted sauce sounds like a good one.
Tingly Ted sauce.
I like that. Good stuff.
Maybe we'll get that on set.
All right, thank you. Brooke DePalma, good stuff. Appreciate that. Coming up, we'll break down some of the biggest takeaways from today's top stories. Stick around.
Tingly Ted sauce.
It's closing time here at Yahoo Finance. Let's recap some of the biggest stories of the day. First up, former President Donald Trump pleading not guilty to 34 felony counts of falsifying business records in the first degree. Most of the charges relate to a hush money deal with Stormy Daniels. Now, prosecutors allege that the deals were created to help bolster Trump's 2016 bid for the White House.
JP Morgan Chase CEO Jamie Dimon out with his annual letter to shareholders. He touched on several issues, including regulation, climate, and the rise of artificial intelligence. But it's his comments on the recent banking crisis that are grabbing the most attention. Dimon makes clear that the current crisis is nothing like what we saw in 2008. However, quote, the current crisis is not yet over, and even when it is behind us, there will be repercussions from it for years to come.
And Richard Branson's space company Virgin Orbit filing for Chapter 11 bankruptcy. The move came after the company failed to find the additional investors needed to keep the company afloat. Now, the company had already laid off most of its staff and is now looking to find a buyer for its assets.
And that'll do it for Yahoo Finance Live today. Be sure to come back tomorrow, 3 p.m. Eastern Time, for all your coverage and leading up to after the closing bell. I don't know what I just said. We'll see you tomorrow.
You're on the auto show. Who cares?
At the auto show.